Guys, it is time for an urgent real-time fundamental analysis as to why both gold and stocks are going to crash. They're going to dump really, really hard, possibly even starting tonight. And that is because tonight, about 1 hour or so before the market closes, is quadruple witching. If you don't know what quadruple witching is, I'll explain it to you. It's where you are forced to close all your leverage positions. So whether you have options, calls, puts, longs, or shorts, they're forced to close whether you're in profit or not. And that's going to happen about an hour before the market closes in the United States, in New York City, today, tonight, wherever you are in the world. Now, but I mean, everything's been going up. I'm in profit. I've been in profit for the last 2 months or 3 weeks or whatever it is. The way the market works, you've heard this expression. The market is designed to take the majority of the money from the majority of the people and give it to the minority of the people who have the majority of the money. That's what markets do. Markets take from the most people and give it to the fewest number of people. And right now, there is a 3-to-2 ratio, calls versus puts. There's literally about 40% more people doing longs right now than there are doing shorts. And you think they're all going to walk away with a bunch of money? We've got literally, from the time of this video, we've got about 5 hours left before quadruple witching happens. And it's quadruple because all the world's futures, all the world's options markets, all the world's whatever else, they all close at exactly the same time and everything starts over. It's liquidation season. Okay, so what should you do? The smart thing to do right now is to do a hedge short and just sell everything. You could always, if nothing bad happens, let's say nothing horrible happens, we don't get a 30% dump tonight, which is, just buy everything back on Monday when it's safer. Am I going to do that? No, I've sold everything. I'm not even going to buy back everything Monday because I'm absolutely sure that gold and stocks and crypto and everything is going to dump really, really hard, whether it happens tonight or Monday or next week or next month. It's going to dump really hard. And I'm not about trying to make another 10% or 15% so that I can lose 50%. That's not why I'm trading. When I see the Titanic start sinking, I'm not going to try and organize one more deck chair. I'm getting the first boat and hiding it from everybody else and getting the hell off the boat first. Now that said, I'm going to explain to you why I think everything is going to dump, including gold. But don't they move separately? If gold goes down, stocks goes up, and vice versa. That's normally the case, except for one other fact. This is a trinity. You're missing one other component to this, one other factor to this, and that's the U.S. dollar. The U.S. dollar right now is like 97 cents or 93 cents or something stupidly low. And once the U.S. dollar starts exploding, everyone is going to want the dollar. The U.S. dollar can't stay under a dollar. U.S. dollar costs under $1 right now. And when it goes up, everybody's going to dump everything, including their gold and including their stocks, to just buy the U.S. dollar. So what's going to drive the U.S. dollar price up? What else? Trump and his tariffs. Trump recently decided to tariff. It's not even a tariff. It's more like a tribute from Japan and Korea. He decided to strong arm them, bully them into giving an investment where he controls everything. They have no rights to decide anything. He's going to solely decide what happens to that money. And I thought it was going to be like a couple $100 million or maybe $1 billion. It's hundreds of billions of dollars. It's literally like 3 or 4% of Japan's entire GDP. 5% of Japan's GDP. That means, do you know what that means? I'm not even, if I have to explain to you what this means, and Korea's GDP, if I have to explain what this part means, you shouldn't be in finance. You shouldn't be trading at all. So I'm not going to explain this. But this is insane. This is like indentured servitude levels. So what's going to happen if Japan and Korea both give all their remember, it's like the restaurant business. You might get millions of dollars of receipts of sales, but you're only literally keeping like 3%, 4% after you pay all your food bills, your employees, your rent and everything else. You're only keeping a couple percent of that money. This 5% may seem small, but it's of GDP. Again, I'm not going to explain this. So what's going to happen? These countries, when they start giving money to the Trump, they're going to need to get money back. They're going to need to get some money so that they can actually build roads and keep the schools open. So how do countries get money? Well, they do it this way. They have something called bonds. And the Japan 10-year bond right now, if look at the chart. I'm not even going to show you the chart. Look at the chart. And you will clearly see, if you zoom out at the daily level, you will clearly see a parabola. It looks like a beautiful, perfectly shaped little arc. And it's going to skyrocket. This Japan 10-year is going to skyrocket. Why is that important, though? What does Japan 10-year have anything to do with the American stock market and the price of gold? You've heard of the Japan carry. If you haven't heard of the Japan carry, that's okay, because you don't have a degree from Harvard Business. Guys from Harvard Business or Princeton School of Economics, they know what the Japan, where did it go? Is it here? Japan 10-year carry. Did you know that Japan has the lowest interest rate in the world right now? Next to what? What? Like, I don't know, Estonia or something, some weird little country like that. Japan has a 0.5%. To put it in perspective, Korea has a 2% interest rate, which is 4 times Japan's interest rate. America has like a 5% interest rate right now, which is 10 times higher than the interest rate of Japan. So what does the Japan carry? What ends up happening is that when funds, when banks, when hedge funds, when JP Morgan, when BlackRock wants to buy stocks, where do they get the money? You think they borrow from an American bank at 5% interest rate? No. They do this. I'm going to show you this in reverse. I think I can reverse this. Yes, I can reverse it. Yes. I made this app, by the way, so that I could do this. Anyway. They get it from Japan. And so if Japan needs money because they've given all their hard-earned cash to America, then the only way they're going to be able to do it is to offer more interest. So, hey, if you invest in Japan, we'll give you more than 0.5%. So once the interest rate of Japan, their 10-year bonds, which is basically just a certificate of deposit. Think of it that way. Japan's bonds are like a savings account with, well, super low interest. But they're going to need to raise the interest so that more countries and more mega corporations give Japan money so that they can keep their schools open and keep fixing their roads and so on, right? So when Japan's interest rate goes up, remember, Japan has a 0.5, half a percentage. Japan has like no interest rate. It's the weirdest Western civilization country. The interest rate is like nothing. But once that interest rate goes up, the Japan carry, let me do this again. I have to do this again. The Japan carry trade is going to be affected. Why? Because BlackRock, JP Morgan, everybody, in order to buy stocks, they borrow money from Japan. They carry money over from Japan, and then they buy American stocks with it. You didn't know that, did you? Now, what ends up happening is they're like, okay, what's cool is that stocks are going up at about 20-30% a year, and Japan's only charging 0.5%. So Japan charges us 0.5%. We make 20-30%, 0.5%, 20-30%. It's worth it. But what if Japan's 10-year goes 10-year, not 10-year, 10-year goes up 0.25%? What is that? 25 basis points or something? I don't deal in basis points. Suddenly, you have a guaranteed risk that's 25% higher than your current guaranteed risk. So everyone's like, well, okay, yeah, so supposedly we could make 30% profit this year, but we're definitely going to lose 25% of our profit on the interest rates. So let's all of a sudden, all at the same time, go pay off all our loans to Japan because it's iffy. What happens then? What happens when BlackRock sells everything they have to pay off all their Japanese loans just because Japan raised their interest rates by 0.25%? And JP Morgan, and Bank of America, and Citibank, and your hedge fund manager, and all the home office family hedge funds, and all the, what do you call those things? the 401ks, the schools and the firemen's and the whatever they're called, the retirement pension fund. When all the pension fund managers sells everything just to close out their their adjustable interest rates all at the same time. Do you need a world war to destroy markets? No, you only need a 25 basis point increase in Japan's interest rate. That's going to have to happen because Japan has to pay America because they promised America 5% of their GDP because they don't have a president. They killed the last one. They made him sick. They food put. No, I'm not. This is going to be on YouTube, so I can't say any more on that. But why China? What's going to happen to all that money? It's going to go to China. I set this up wrong. Let's redo this. Let's pretend that didn't happen because I'm not going to edit this out in Adobe Premiere or whatever. So where's all that money going to go? That money is going to go to China. China? Why do you think all the money is going to go from gold and U.S. stock markets and crypto to China? Why China? Because China's been working on, for the last 5 years, Brics. Brazil, Russia, India. Is it India or Iraq? India, I guess. Which is why America hates, Trump hates Modi right now. And China and, what is it? South or what's the S stand for? Whatever it is. Anyway, China and Russia, they are in the sea are the most important thing. South Brazil or something? Anyway. What they did was they created their own currency. Remember, what happened in the past is that when U.S. stocks dumped, it took the whole world with it. When there was a mortgage crisis, whenever there was a housing crisis, the entire world collapsed. You remember Evergrande? Everything collapsed at the same time because all the money was tied together because everybody was dependent on the same U.S. dollar. Everything is the U.S. dollar standard. It's the dollar oil or petrodollar. It's the Chinese yuan dollar. It's the DX. It's the dollar everything. That's why these guys got together and said dollar nothing. So the central bankers in Switzerland, who happen to be owned by it, which I'm not going to say the word, don't like that. They're getting they had a monopoly for the last ever since Jesus went and took the tables and. Not going to touch it. Not going to go there. So China and Russia and Brazil and India decided to make their own thing. And so now if the American stock market crashes and the American dollar goes sky high so no one can afford anything and America goes into poverty mode, literally like Japan. Have you been to Japan recently? Looks like a modern country, but they're still using microfiche. They're using Rolodexes because they can't afford to upgrade their computers. I'm not kidding you. I'm not kidding you. Do they even use Excel? They use fax machines in Japan still because they can't afford to upgrade. Getting off the point here. Brics. Because Japan or China and Russia are no longer on the dollar standard, they don't have to have their markets dump. That's why they made deals with other countries. They tried to make deals with Switzerland. Didn't go so well because Switzerland is owned by Israel, which I'm not going to talk about. Since Jesus overturned the... Anyway, Saudi Arabia. China. Xi Jinping has been talking to the Saudis about investment in China for the last 2 or 3 years, getting ready for this main event where Brics would be set up. And guess what else is going to be set up? Even a high-speed railroad for exports from China going through Russia into... Saudi Arabia, in the Middle East, and even further into Europe. So we're going to have a decade of up-only stocks, in China. And we might actually have a 5-10 year recession or depression in America. And you're still holding American stocks right now? You're not shorting stocks? If you want me to short for you because you can't short or you can't mind it 24 hours, you can't manage it 24, Bitcoin-fund-manager.com. Contact me. Bitcoin-fund-manager.com. And that's Bitcoin-fundmanager.com with dashes. And I will short the market for you.